Hey everyone, welcome back to the AI Tech channel. Today, we're diving into something that's got Wall Street buzzing and Silicon Valley sweating. Remember that saying, a butterfly flaps its wings in Brazil and causes a tornado in Texas? Well, that butterfly might just be a Chinese AI startup called DeepSeek. They've released a new AI model, and the ripple effects are already being felt. But is this just hype, or is it a real threat? That's what we're breaking down today. Buckle up, because this is going to be a wild ride. Is DeepSeek revelation is scarier to investors than it is to tech CEOs? Stay tuned to find out. Okay, let's get straight to the point. The stock market took a hit. We're talking stocks closing lower across the board. Tesla and Nvidia, two of the darlings of the tech world, are experiencing significant slumps. Ouch, that's not just a minor dip, that's a wake-up call. Investors are clearly spooked. But why? What's DeepSeek got to do with all this? Well, the fear is that this new AI model could shake up the entire competitive landscape. And when investors get scared, they sell. Simple as that. Let's zoom in on Alphabet, or Google, as most of us know it. Their stock, Google, fell 1.4% on Monday. Now, analysts are generally still bullish on Alphabet, but that drop is significant. And the timing couldn't be worse. They have an earnings report coming up, and the pressure is on. The big question is, can Alphabet maintain its dominance in the face of this new competition from DeepSeek? Are they ready to fight back, or are they going to get caught flat-footed? The market is waiting with bated breath. Now, let's switch gears to Moderna. This one's a bit different. Their stock plummeted a whopping 7.3%. That's not just a market correction. That's a full-blown crisis. Goldman Sachs downgraded them, and they reduced their revenue guidance. Ouch again. This is a direct hit. It signals a loss of confidence in Moderna's near-term financial performance. The glory days of the COVID vaccine boom seem to be fading, and they need to find a new blockbuster product and fast. Next up, we have Franklin Resources. They saw a 6.9% decline. This is a bit of a correction after some positive earnings news, but the underlying issues are still there. They're struggling with declining assets under management, or AUM, and net outflows. Basically, people are pulling their money out. This suggests that investors are losing faith in their ability to generate returns. It's a tough business in a volatile market. Finally, let's talk about FedEx. They took a 6.6% hit after a Loop Capital downgrade due to tariff concerns. Tariffs, remember those? They're back in the news, and they're causing headaches for companies like FedEx that rely on global trade. This shows just how sensitive the market is to trade policy changes. Any hint of increased tariffs and the market panics. It's a constant balancing act. So, what does all this mean for the broader technology sector? Well, the Nvidia slump and the AI concerns surrounding Alphabet are definitely raising eyebrows. Increased competition in AI from companies like DeepSeek could lead to increased pressure on U.S. companies to innovate and invest in AI even more. This could trigger a new AI arms race. Are U.S. tech companies ready for that kind of competition, or will they fall behind? Moderna's struggles could signal wider challenges within the biotech sector, especially for companies relying heavily on a single product, like a vaccine, and facing uncertain sales trajectories. It is a warning sign. Other biotech companies with similar business models should be paying very close attention. This is a reminder that the biotech industry is inherently risky. One minute you're on top of the world, the next you're facing a major downturn. Franklin Resources' woes, with their declining AUM, could be indicative of a broader trend in the investment management industry. Market volatility, investor shifts towards different asset classes, and the rise of passive investing are all putting pressure on traditional asset managers. This is a sign that the entire industry needs to adapt to survive. And let's not forget about the transportation sector. The FedEx downgrade due to tariff anxieties highlights the vulnerability of the transportation sector to trade policy. Other shipping and logistics companies, like UPS and DHL, could also face similar challenges. Trade wars are bad news for everyone involved in moving goods around the world. Okay, let's zoom out and look at the bigger picture. A sustained market downturn could erode investor confidence, leading to reduced investment and slower economic growth. That's a scary thought. If companies like Moderna or FedEx continue to struggle, job cuts could occur. And if the overall investment management industry faces AUM declines, layoffs might be implemented to reduce costs. These are real-world consequences that affect real people. The tariff news and its impact on FedEx underscore the potential for trade policies to disrupt supply chains, increase prices for consumers, and negatively impact businesses that rely on global trade. This could lead to inflation, which would further squeeze consumers' wallets. It's a vicious cycle. But there's also a potential upside. The emergence of DeepSeek as a competitor in AI could spur increased investment and innovation in the field. This could lead to new technologies and products that benefit everyone. Competition is a powerful motivator. It forces companies to up their game and push the boundaries of what's possible. On the other hand, if Moderna's vaccine business faces challenges, it could affect the availability and affordability of vaccines, potentially impacting public health. That's a serious concern. We need to ensure that everyone has access to the healthcare they need, regardless of their economic status. So, is DeepSeek a real threat to U.S. tech giants? That's the million-dollar question. Well, from the investor's perspective, the answer seems to be a resounding yes. The stock market is clearly reacting to the potential disruption that DeepSeek could bring. But what about the tech CEOs themselves? Are they taking this seriously? Or are they underestimating the competition? I think they should be very worried. Okay, let's shift gears and talk about some of the risks involved here. The first one might seem a little strange, but it's important. We saw a snippet of text that said, "Are you a robot?" This might seem like a minor technical issue, but it highlights a real problem. Systems incorrectly identifying legitimate users as bots can lead to a poor user experience and potential loss of access to services. It also points to a deeper issue: the constant battle against malicious bots trying to disrupt services and steal data. It's an ongoing arms race in the digital world. The article mentions DeepSeek releasing a sophisticated, cost-efficient AI model. This poses a significant technical risk to Alphabet and other U.S. tech companies. If DeepSeek's AI model is truly superior or more cost-effective, it could create a competitive disadvantage for U.S. firms, hindering their ability to innovate and maintain market share. This is a wake-up call for U.S. companies to step up their game. The emergence of successful foreign AI companies like DeepSeek could attract talent away from U.S. firms, further exacerbating the innovation gap. The best and brightest minds want to work for the companies that are pushing the boundaries of technology. If U.S. companies fall behind, they could lose out on the talent they need to stay competitive. U.S. firms may need to significantly increase their R&D spending on AI to remain competitive, which could impact profitability in the short term. Investing in research and development is crucial for long-term success, but it can also put a strain on a company's finances. It's a delicate balancing act. Let's talk about business risks. The downgrade of FedEx due to the White House's tariff announcement highlights a significant business risk. Tariffs and other protectionist measures can disrupt global supply chains, reduce trade volumes, and increase costs for businesses, negatively impacting profitability. This is a reminder that businesses are at the mercy of government policies. Moderna's reduced product revenue guidance and Goldman Sachs' downgrade point to several business risks. Demand for Moderna's COVID-19 vaccine may be declining as the pandemic subsides, and its respiratory vaccine business may not be performing as expected. This is a reminder that even the most successful companies can face challenges when market conditions change. If Moderna does not achieve profitability by 2029, it could face financial difficulties, including the need to raise additional capital. That's a big if. They need to find a way to diversify their product portfolio and generate sustainable revenue streams. The decline in assets under management, AUM, at Franklin Resources indicates a business risk. Investors are withdrawing funds from Franklin's products, suggesting concerns about the company's investment performance or market conditions. This is a reminder that investment management is a competitive business. You need to consistently deliver results to keep your clients happy. While analysts are mostly bullish on Alphabet, there's still a risk regarding earnings. The pressure to invest heavily in AI could impact Alphabet's profit margins, especially if those investments don't pay off quickly. They are spending big on AI, but they need to show ROI soon. Now, let's delve into the ethical risks. The rapid development of AI raises some serious ethical concerns. AI models can perpetuate and amplify existing biases in data, leading to discriminatory outcomes. This is a problem that needs to be addressed head-on. We need to ensure that AI is used in a fair and equitable way. AI-powered automation could lead to significant job losses across various industries. This is a legitimate concern that needs to be addressed. We need to find ways to retrain workers and create new opportunities in the age of AI. AI can be used to create deepfakes and spread misinformation, undermining trust in institutions and society. This is a dangerous trend that needs to be combated. We need to be vigilant about identifying and debunking false information. The inner workings of complex AI models are often opaque, making it difficult to understand how they make decisions. And it can be challenging to assign responsibility for the consequences of AI-driven decisions. This lack of transparency and accountability is a major concern. We need to find ways to make AI more transparent and accountable. Analyst ratings can be influenced by various factors, including relationships with the companies they cover, potentially leading to biased recommendations. News outlets may selectively report information to create a particular narrative, potentially misleading investors. Always do your own research and don't rely solely on what you read in the news. In summary, the market news paints a picture of uncertainty driven by trade policy, competition in emerging technologies, and company-specific challenges. These factors have the potential to affect not only investors and specific industries, but also the broader economy and society. So, what's the takeaway? The world is changing rapidly, and we need to be prepared for anything. The emergence of DeepSeek is a reminder that innovation can come from anywhere. We need to be vigilant about the risks, but also embrace the opportunities that AI presents. The future is uncertain, but one thing is clear. The AI revolution is just getting started. Thanks for watching, and I'll see you in the next video.